Hey everyone, hope we're all well. Welcome back to another Sunday Sessions video. If you're new to the channel and you've not seen one of these beforehand, it's pretty much where myself and Luke, we both take a half of this video and run through the market, giving you our bias and outlook for what we believe price is going to do on a range of markets in this coming trading week. We believe that in watching this video, you are pretty much just going to prepare yourselves to the best of your ability for this coming week through the use of the information and analysis that me and Luke will be providing. So I'm going to be starting off here on the Great British Pound US dollar. I think I'll go through 2 or 3 markets before passing you over to Luke, who will also discuss some of his outlook. So what I actually did on this market was an exclusive top-down analysis video for the LAGFX Learning Lounge. If you're not yet involved, it's just a free Telegram group chat where we try to provide as much educational content as possible. Link is always in the description if you are interested in that at all. But I pretty much used a 3-box strategy to go through the entire top down, I think from like the 3-month downwards. We can see that price has literally breached an all-time low in this market since 1971. So obviously, as of right now, the pound is extremely weak against the dollar. Now, if we actually look inside of this structurally, how are we going to actually tackle this? You'll notice that I have many blue boxes here. Now, what they are representing is the fractalization of this market. So as of right now, I believe price is working within this blue box in the fractalization of this. If we go down slightly low, we can see what's happening. We're just about to deliver a correctional wave in the market, which has tapped into a zone, which we do appear to be having a reversal from. So we need to identify whether price is going to reverse right now in the market. As soon as price opens back up, the market's open back up. Is price going to make a new move lower to continue taking the lows, or do we have a higher time frame correctional wave incoming? So if we want to work within this blue box, we can either reverse at this zone here or the zone higher, which lays at 1.1984. If we come to break that protected high, what that means is rather than us looking at this blue box, the second a protected high is broken in this terms of fractalization, we would then go higher, look inside of the next blue box, which represents this one right here, where we have this bearishness coming down as an impulsive wave. You see that if this protected high gets broken, we have the opportunity to reverse within one of these 2 zones, looking at 1.2974, I believe that is, around that region, and then 1.348. So if price breaks this protected high, I'm looking at these 2 POIs for a reversal to get involved in shorts longer term to expect that price will exceed this low. However, if price then comes to run this protected high, we then zoom out one more time and say, right, well, we're probably working within this as an impulsive wave, giving that correctional wave, which is likely to come and mitigate either the zone up here or potentially something else within this region. So it's definitely interesting to see what will happen with this market. Obviously, we're at an all-time low. So it could be a case that the Bank of England decides to start pumping money, pumping liquidity into the pound to give it some strength back against the dollar, because I believe continued bearishness here is going to be very bad news for the pound, going for the first time ever below that 1-to-1 ratio, which will definitely cause a lot of mayhem in this market, I believe. So we really need to try and gauge what's happening. And I think economically and fundamentally, we're going to have a lot of economic drivers in this market. So I would be cautious when it comes to placing positions because of the fact that there is a lot of outside volatility, external factors that may affect it. But nonetheless, following what the structure is telling us, if we go lower now, I can show you that. I believe we've just tapped into a zone where we've built up liquidity first. We've had that high volume push through the liquidity, a break of structure delivered. I've then identified 2 supply zones, which price may react to. If so, I believe we'll have the reaction. Price will continue lower, and we can look to take a position down to this low here. So that is my outlook for pound dollar in this coming week. Now onto Euro USD. We can see that in this market, of course, we are being delivered with a correction wave. So this is the most recent major impulse in the market from here, technically all the way to this point down here. As we started to see price breaking these highs, we took the assumption that we were seeing a correction wave, and I was assuming that this correction wave would reverse within one of these 3 points of interest before making its next impulse lower. Price came, delivered us up to the first one, where we started to see signs of a reversal lower. We had that initial push. I started to look at this for sells, but then I quickly noticed that there was just not enough volume or volatility to the downside to back that move, to back my bias. So I thought, right, evidently price is not yet ready to make that next impulsive wave. Let's continue to look at this from a current bullish standpoint, where we could have gotten involved in a trade here, where we had entry confirmation inside of this point of interest. We can go lower to showcase that. A clear sell to buy region. Price comes in, builds liquidity, high volume push to clear that liquidity, a fractal break of structure, a tap of a fractal demand zone before taking off, and then eventually the higher time frame break of structure. As price was continuing, I noticed that we have this zone left unmitigated, which still remains unmitigated, which price could at any point come to mitigate. This zone here was something I called within an exclusive video to the VIP chat, where price was reversing to. It's another position we could have found to trade it up. Obviously, as we were zoomed in here, you see clear last sell to buy candle. Again, price has recently come down, traded into that. Whether or not it comes to create a new high in the market, I don't know. It doesn't appear like there's too much upside volatility. So if that's the case, we may then be looking at price to trade down, tap into this zone here before making a next move higher. Now, the reason I believe price will continue higher, even though my higher time frame bias is for price to remain bearish, is because of the fact that we've not had a clear reaction or reversal to a supply zone, in my opinion. This one here, yes, we could argue we have reacted to this region, but not in a way that would signify to me that the institutions have manufactured that move, because of the fact, as I always bring up, I want to see clear level of liquidity built below the zone. I want to see a clear high volume push to clear that liquidity, indicating that the institutions have opened a position there in order to clear that liquidity. And then finally, a clear break of structure. Now, don't get me wrong, we have been delivered with a break of structure, but I don't see a massive level of liquidity or a huge high volume push, plus price has liquidated that zone. So I don't really believe price is ready to make the new impulsive wave as of right now. Doesn't mean it definitely won't. I just think bringing everything together within my concept, within my analysis and bias, I think it's more likely that price continues bullish than it does continue in bearishness. So I'll be looking at this zone to take buys from, with the assumption that we can then trade price higher into these zones higher that price may eventually come up to react from before getting ready to create its new impulse lower. So it's definitely a bit of a waiting game to see what happens here, because we are within a region where is price going to continue following this fractalization of the structure, where this should be a protected high and we should expect price to protect that high, reverse somewhere within this region before making its move lower? Or are we waiting to see a higher time frame correctional wave? In that case, from A to B here is a single impulse, and therefore on this time frame, the higher time frame, price can technically trade up to and reverse anywhere between A to B. So all depends what fractalization we want to follow. Whether we want to follow this as an overall impulse and reverse somewhere inside of that, or if we want to continue holding this fractalized structure, protect this high and reverse in one of these three zones. The reason why this is my bias is because longer term, this is a huge sell to buy region in the scheme of the higher time frames, which if price wants to continue this bullishness, it should have to reverse in before making its next impulse higher. So we'll have to see exactly what happens. But my bias for now is to trade price down into that zone. So longer term, I am still looking to remain bearish until that zone is tapped. So that is my Euro US dollar bias. Finally, the US dollar to the yen. Looking inside of here, we see that I was waiting for this zone to be tapped since the 7th of September. It got tapped on the 22nd, and we pretty much spent all of last week looking for buy positions in this region. We had many taps of demand zones since the overall reversal, each blue box representing an individual impulse within this move higher, each red box representing the tap of a demand zone where an entry could have been found. So you see there is many taps where we could have been taking positions, buy positions, partialing along the way and walking away with some nice profits. Recently had a reaction to a zone here. However, the reaction from that and move higher has not been done with high volume or volatility, which is an indication to me that price probably doesn't want to continue higher and is struggling with the amount of demand in the market, and therefore is struggling to continue higher. So this is another one where we're just going to have to see what price does. I would like to see it exceed this target and continue bullish for a long time to come, because on the higher time frame scheme of this, we have recently broken a protected high, and I believe we want to deliver a big correctional wave up into one of these zones. So that is my outlook for this week. Those are the markets I'm mainly going to be looking at: Euro US, Pound US, and Dollar Yen. Those are the main markets. I have all my alerts set at zones I will be looking to take positions from. And then when those alerts are pinged, I'll be updating that analysis and explaining my approach on how to tackle those positions in the VIP chat and in the learning lounge. So if you're interested in getting further updates on this analysis, make sure to check those out. But for now, I'm going to pass you over to Luke so you can see his analysis and his outlook for this coming week.
How are we getting on, people? I hope you're all okay. I hope you've enjoyed James's analysis today. He's gone over some brilliant pairs, and I believe that his bias for all of them offer good probability. It'll be interesting to see how the markets play out this week. What I'm going to do is fly through some of the pairs I'm looking to trade this coming week, give you my bias, give you the zones I'm looking to trade from, and hopefully that will be enough information for you guys to go away with and profit alongside me and James this coming week. So the first market I'm going to be going through is Great British Pound to the US dollar. As we can see on screen, this market is predominantly bearish. If we just trail back, we'll see how this market is predominantly bearish. So we want to be looking for sell positions as we want to trade alongside the prevalent trend. What we have seen as of recently is price trailing back into a higher time frame point of interest. This higher time frame point of interest is clearly holding a lot of supply, which is hopefully going to be enough to push the market lower, taking its next higher time frame impulsive wave. What we've seen as of recently is this trail back, the penetration of the zone, and we've now seen a break of structure to the downside. This is what is suggesting that price is ready to continue moving lower, where we can then look to be getting introduced into the market. What I have done is I've actually highlighted another supply zone within this impulsive wave lower. Price has come to penetrate and is actually holding from this zone. So we could actually have a placeable position as of the open tonight. So with that being said, how would I look to execute my position? Well, I want to see bearishness continue, and I want to see price start trading below this zone. Once we have that, I will then look to execute my position with my stop loss below the high that has been created. And then my take profit will be set at the previous swing low. Now, why will it be set at the previous swing low? Because within bearish structure, we know that price goes down and creates lower lows and lower highs. So we can expect price to at least come down to the previous swing low, if not penetrate through. But in order for our take profit to be achieved indefinitely, we can set it just above this zone. Now, this trade here would offer us with a 1 to 9.5 risk to reward ratio. If you are trading with a 1% risk, this is 9.5% returns. If you trade 2% like I do, you're looking at nearly 19% from one position. So this is a trade I'm looking to place as of the open later on tonight. Just keep your eye out, ensure that price is continuing bearish, and then look to get involved in this market on those sell positions. Okay, now moving over to the USD JPY pair. As we can see, price again is within this corrective phase. It is putting in this corrective wave, this retracement. Retracements always occur after an impulse. This was obviously our impulse, which was introduced and done on the back end of some US fundamentals about a week, 2 weeks ago. What we are seeing now is price correct itself, clear any remaining liquidity to the upside in order to continue pushing price lower. So I believe, again, there's going to be enough supply within this zone to introduce this next impulsive wave that takes us lower. So with that being said, as you can see, I've drawn out my path tool. We could look to buy before we sell, but with price being somewhat close to this area, I know this is on the 1 hour time frame, so this is still, 300-400 pips away. I am going to be patient and actually wait for price to play out. Wait for price to tap into the zone. Once we have a valid entry, I will then be looking to execute those sell positions. So it'll be a case of price penetrating, breaking structure to the downside, and then putting in that bearish leg. Once we have that, we can then look to execute. So again, look for sell positions, highlight this zone for yourself, and wait for price to reach this point in the market. Okay, now moving over to the Euro USD. Again, this is a bearish dominant market. We want to be looking for sell positions as we want to trade with the trend and not against it. So when we look to trade this market, as I said, we want to be looking for those sells. As we can see, price has put in that bearish impulse. We are now seeing price put in that corrective wave. Price has put in that corrective wave, tapping into this point of interest here that I had highlighted. We have then seen a break of structure to the downside. We have then seen a new lower low get created and what looks to be a new lower high. Now, assuming price continues in this bearish manner, we can look to get introduced into this market. So what I have done, very similar to the Great British Pound USD pair, is I will go down fractally and I will wait for a fractal break of structure here. So I will have this zone highlighted, highlight it for yourself as well, people. Once we see price break this low here, that would be enough evidence for me to look to get introduced into this market. Now, this high looks to have tapped anything that was left over within this candle. This fractal high looks to have tapped into this last green candle. So I believe that this is now the new protected high. So we could have our stop loss just above this point and our entry would be just below. And then our final take profit target would be at the swing low down here. Again, this is offering us with a 1-to-7 risk to reward ratio. We have all evidence and enough confluence in order to actually execute positions on this trade. So I am more than confident that this will play out. We just need to look to execute this position on the open come tonight. So as soon as we have a break in this low, I will be looking to execute. So I'm going to set my alert and look to get introduced. Now, what you guys could do is actually set a pending order. Set a pending order for a sell to be activated once price surpasses 0.97904. Having your stop loss set just above this point and then your take profit set here. The parameters are on screen on the right hand side, so you could always implement those within your trade if you wanted to. Now moving over to the AUD USD. Again, very bearish market. We have seen that impulsive wave take place. I'm now wanting to see a corrective wave be implemented within the market so we can look to get involved in those buy positions. Yes, it is a different bias to the Euro USD and the Great British Pound USD, where usually you would expect them to coincide as the Great British Pound USD and the Euro USD do, but they don't always do that. So we have seen a break of structure to the upside. We have what could be a higher high in the market. If this is a higher high and we start to see structure build again, then I will be looking to execute buy positions and I'd have my take profit set at this point here as we have a Fibonacci box and a higher time frame point of interest that I have highlighted as well, an unmitigated candle. Take a screenshot of this market here and wait and see how price plays out. If you are delivered with the confluence to buy into this market, then by all means execute those positions. and let's see how price plays out. Now, this does come to the end of this week's Sunday Sessions video. I hope you've enjoyed my analysis as well as James's. I hope you've learned a thing or two, and I hope you have some good areas that you can work with this coming week to potentially profit and make some good returns in the markets. If you haven't done already, head over to the LAGFX website. We do have multiple courses, mentorship programs, and free booster packs. So check those out. We also have a trading room page where you can actually do analysis and take advantage of indicators that we have live on the website. But the thing that stands out the most is this LAGFX's free course. Go and check that out. We have loads of information on there that I think will help propel you forward in this industry. But with all that being said, I hope you've enjoyed this week's Sunday Sessions video, and I'll catch you all in the next one.